Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. Market snaps 3-day losing run. Sensex up over 300 points. Nifty ends above 15,800. FMCG gains. Metals drag. There might be no respite for Dalal Street investors in days to come. That's the word coming in from our market guru Mahesh Nandurkar, who believes we will see more selling going ahead.
It's not necessary that this selling can come to an end. I'll not be surprised if we see some more selling going forward.
Country's largest car maker Maruti Suzuki all set to launch its all-new SUV on 20th July. Reports suggest that new SUV will be competing with the likes of Hyundai Creta and Kia Seltos. Government set to garner over 1 lakh crore a year from the taxes imposed on export of fuel and windfall gains made by oil companies, says Morgan Stanley. Brokerages are mixed on the impact on ONGC, even as they remain largely positive on outlook for Reliance. Cryptocurrency exchange Vol suspends all operations over financial crisis, becomes first Indian crypto exchange to suspend withdrawals, trading and deposits amid market downturn. Markets snapping a 3-day losing run to end a volatile session in the green. Sensex gained over 300 points to shut shop at 53,234. Nifty also ending above the 15,800 mark. FMCG stocks were the darlings of Dalal Street today. Nifty FMCG was up about 3% after palm oil prices fell 10%. ITC continues the up move with the stock rising to a 3-year high. Metals continue to lose sheen as global prices fell. Broader markets outperformed the benchmark. 3 of the top 5 Nifty gainers today, FMCG stocks, HUL, Britannia, ITC. Other blue chip gainers, IndusInd Bank and ICICI Bank. On the downside, ONGC slipped another 4% as windfall tax continued to weigh. TCS, Tata Steel, JSW Steel and Cipla among some of the other top laggards. Shares of state-owned oil and gas companies ONGC and Oil India were trading lower for the second straight day, falling up to 6% in the session after the government's imposed windfall tax on domestically produced crude oil and fuel exports, and said it would only withdraw the tax if global prices of crude fall as much as $40 a barrel. Besides, it also imposed a cess on domestic crude output. Analysts say the development is a setback for refiners as they cut FY23 estimates steeply. The imposition of the new excise duty will severely restrict benefits from elevated global crude oil prices to earnings of companies like ONGC and Oil India. However, according to various brokerages, the new levies will give the government up to 1.3 lakh crore in additional revenue. Our global business editor Udayan Mukherjee joining us now. Udayan, kicking off the week with a reasonable close today. What's standing out for you in terms of factors to watch out for?
Market seems stable, Abha, going into earnings season, but I think now the focus will shift to earnings. You know, the last few weeks have been a bit topsy-turvy for the markets, if you will. There's been a lot of FI selling. Markets have gone down and retested lows, made new lows, and then they've come back and they seem to be consolidating at this point in time. So in one sense, you could say that markets have digested this leg of the fall, and now they're waiting for the next bit of news to come in. And the news actually could be earnings, because as a lot of people have been pointing out on this show as well, that the PE-led fall probably has happened already, or quite a bit of it has happened, and now it's up to earnings. And if earnings start to get downgraded quarter after quarter, then this market will run into very serious headwinds, and it will find it difficult to stay at this kind of level. So I think the focus is now going to be on the fundamentals, starting with the IT companies, which saw some downgrades last time around. If there are more downgrades this time, then I think the market will start to get quite worried as well. Globally too, markets have slipped, but they seem to be stabilizing around these kind of levels. I mean, sporadically you're seeing bounce backs. So I think the mood is one of consolidation, wait and watch. And I think this earnings season will be quite important in determining the next course of movement or the next leg of the move for the market. And that should be how it is, because the markets cannot move on sentiment and liquidity only. they need fundamental drivers. So we'll wait to see the fundamental driver from earnings now. Guest on the show today, Mahesh Nandulkar, Managing Director and Head of Research at Jefferies. Mahesh is a veteran of the market and has been tracking India for well over 2 decades now, probably closer to 3. But Mahesh, great to have you on the show. And it's an opportune time because you've just come back from a fortnight with roadshows in the United States where presumably you've met a lot of the old India hands and the big investors. So you're in the right place to tell us what the mood on India is at this point in time. Is it still very negative? Should we expect much more of FII selling in the months to come? Or did you come away with the sense that much of the selling is already done, not much to go?
Thanks, Udayan, and thanks, Abha, first of all, for having me here. Well, it is, just to correct you then, 2 decades, not 3. Although I've lost a lot of hair, but it's still 2 decades. Anyway, so yeah, to answer your question, yes, it's been sort of quite interesting set of meetings here with the US-based investors. And what I can say is that, while India has seen a lot of foreign selling already, as you rightly mentioned, we've been seeing almost like $5 billion a month kind of a net selling by the foreign investors over the last several months now. And we've seen more than $30 billion selling in the last 6-7 months. But to put that number into the context of overall FII investments here in India, that's like more than $600 billion. So what we've seen, is still, only a small part. And the sense that I get, then is that it's not necessary that this selling can come to an end pretty soon. I'll not be surprised if we see some more selling going forward. The reason is that the valuations of the Indian markets on a relative basis are still on the higher side. If you look at it from the emerging market and the Asia ex-Japan kind of a context. And while India always trades at a premium, but the current premium is much more than the average, primarily because of the low valuations in China. And yeah, so that's one reason, which is the valuation. And secondly, at a slightly more broader level or at a global level, with the rate hikes in the US, the way they are sort of going through, and in the rest of the world as well, and I'm sure there'll be more rate hikes in India as well. That's not exactly a very conducive environment for equities. So yeah, so to answer your question, I'll not be surprised if selling continues for some more time.
This is an interesting point, Mahesh, because a lot of your peers seem to be suggesting that the PE correction has happened in India. Now whatever has to happen will probably be led by earnings downgrades. But you think that there is still room for PE contraction in an absolute term? I mean, price earnings multiples led by things like sentiment, technical factors like global selling, etc. Do you think that can bring down the PE notch for India even further from the correction that we've seen already?
Yeah, I do believe so then, because when we talk about average multiples, the multiples move on either side of that line, right? And for the last several years, we have been on the higher side of that line, and we are now coming towards the average. But given the global backdrop, I will not be surprised if we move on the other side of that line. That's my kind of limited point. And also, as I mentioned earlier, there is clearly a search for value trade going on in the world, and especially with the policymakers in China seems to be giving some indications towards that policy easing part, which has the capacity to attract more equity capital or more flows. But having said that, I must also add that I'm very positive and I'm very constructive on the Indian economic outlook, the corporate earnings outlook. I personally believe that while the rest of the world and US and some of the other major markets are going through the periods of recession driven by the much higher interest rates that's now prevailing, I believe that India actually has a much lesser downside on the earnings growth, on the GDP growth, because of the higher interest rate environment, because I believe that the Indian economy is at the cusp of a potential uptick, and if it wasn't for the global headwinds, I think the GDP growth would have surged much more.
You said earlier that you don't expect major downgrades, Mahesh, but the fear of downgrades actually is more in the commodity-linked segments, because commodity prices have started coming off very sharply this year. But before we talk about metals, perhaps you could tell us what you're doing with many of these upstream oil companies now, because the windfall tax has probably led to a scramble to mark down earnings expectations for the ONGCs and Reliances of the world. Do you think that sector will struggle going forward?
Yeah, I think with the latest changes in the regulatory environment and the export tax and production tax, etc., or cess, etc., it has definitely created an environment of uncertainty in the both the private players as well as the public sector players. And my sense is that given how we have seen the situation has evolved. On the marketing margin side, there was an expectation that, once the UP state elections are over, the marketing margins will get normalized in due course of time. But that, is still awaited. So I think there's also going to be a worry that, how long will these windfall taxes remain, and, whether even after, let's say, the oil prices has corrected or the refining margins have corrected, whether, these taxes will still continue to stay on for some more time after that. We don't know. So it definitely has created some element of uncertainties, in the minds of investors, which is probably going to weigh on these stocks.
Country's largest car maker, Maruti Suzuki, all set to launch its new SUV on the 20th of this month. Speaking to Business Today TV's Chetan Bhutani, Shashank Srivastav, Senior Executive Director at Maruti Suzuki, mentioned about the launch, its sales numbers for the month of June. Maruti, remember, sold a total of 1,55,857 units last month. That's a growth of 5% versus June last year. Here's a slice of that conversation.
Tell us about the numbers. Witnessing growth of 5%. Exports also going good. Give us a highlight of the numbers.
Yeah, so actually the number are relatively flat when you compare with the May month, and also when you compare it with last year. However, last year we had a full month of production, and this year it's slightly different because we had a maintenance shutdown. Our factory was closed for a week, so there is some effect of non-availability as far as production is concerned. We have a good number of pending bookings, as you know, almost 300,000. So going forward, we hope that we'll increase the production and try to increase the numbers from here. Also, for the industry, this was a good quarter because this quarter the sale was almost 909,000. This is followed by a Q4 of last year financial year, which was 922,000. So there are two consecutive quarters of 900,000 plus. I think that's the first time ever in Indian auto industry. So there is some issues relating to semiconductor supply, but still I think the demand parameter seems to be holding good at the moment.
With Maruti expanding its portfolio from Brezza, there has been a lot of hue and cry, especially over social media, that when is the Jimny coming? There's been all raised up excitement about that. So that's why I'm seeking an answer, because every time I ask you this question,
so definitely I'll answer this question. First of all, we have said this before that we will be focusing on SUV segment in a big way. And the reason also is we have mentioned before is that while in the non-SUV space our market share is 65% plus, which is a very healthy market share, and it's also the highest we have had for the last 20 years. But when you combine it with SUV market share, our overall market share falls below 50%, which is the objective which we always have, 50% of the market. So one of the key reasons for that is our it's not a great market share that we have in the SUV segment. Of course, we are still number one player in the B segment, but still I think the market share is 60% plus. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So we are still number one player in the B segment. So for the last 5 years, including the last year. However, our market share is around 20%. So while we are market leaders with 20%, when you compare it with 65% of non-SUV market share, it is obviously pulling down the overall market share. And therefore, we had launched the Brezza, which is the market leader in the entry SUV segment. So that is a very large part of the SUV segment. The next largest part is the mid SUV segment, which is 18% of the overall market. And that segment is basically for a larger SUV, maybe a 4.3 meter type of SUV. And that is what we are going to launch very shortly. We will be unveiling the same in July, on July 20th actually, we will be unveiling that. And it has two powertrains, the strong hybrid and the mild hybrid powertrain. The full production of that model, however, will start in August. But on 20th July, we will unveil it. And that is another foray into a segment where we have almost no presence. And therefore, that is an important part of our SUV journey. The next few ones, including the Jimny, which you are referring to, we had showcased the Jimny in the 2020 Auto Expo. We collected some extremely good feedback, and right now we are finalizing our marketing plans for that, including the date of launch, etc.
So July 20th, we are not expecting the Jimny to be coming up, or it will be an entire new vehicle from Maruti?
No, it will be an entire new vehicle from Maruti Suzuki, which will come up on 20th July.
Now let's get you a state of the economy view from none other than Sanjeev Goenka, chairperson, RPSG Group, who spoke at India Today Conclave East with Rahul Kanwal. Listen in.
Start by getting your macro sense of the India story as you see it from your conglomerate, in terms of how we are on the back of the pandemic, because there are lots of global headwinds that we are facing. The Russia-Ukraine war, interest rates which seem to be rising with no bottom and with no defined top, which is clearly visible. And we've got a time where inflation rates are continuing to rise very much. So how do you see all of this impact the India growth story from your prism?
I think the headwinds in the global economy definitely impact everyone, including India. But having said that, we are in a much better position than any other country, or most other countries. And I think the internal story is completely intact. The confidence is high. The stability is strong. And I think some investments have been announced. Some more will probably be announced. I think people are just waiting to see the end of the Russia-Ukraine situation and things like that. And just a couple of these factors, and then you will see a flurry of investments. That's my estimate.
I remember the conversation we had at the same stage when we'd come for the East Conclave, and that time as well, your concerns were similar. The headlines at that time were different. They had to do with the pandemic and the uncertainty on account of the pandemic. But this lingering uncertainty, previously on account of the pandemic, now on account of interest rates, inflation, the war, and the impact that this lingering uncertainty has on investment plans for corporates such as you.
Any kind of uncertainty definitely impacts the sentiment. But COVID, when it hit us, was a huge uncertainty. Everyone was scared for their life. Today, it's a political situation internationally. The Russia-Ukraine war, the impact it has on the oil prices, the impact it has on the inflation. I think the investment plans are drawn up by and large, but I think people are just waiting to announce it. And once there is an end to that situation, you will probably see a huge rush of investment happening in the country.
But from a macroeconomic perspective, India Inc. holding back its investment plans at a time when government finance is already stretched, because you've got crude prices globally which are on the ascendant, creates a situation where you have a chicken and egg situation, where the government is saying our capacity to spend on capital expenditure projects is now limited because our fiscal headroom is lesser. Corporates such as you very logically would say we need this uncertainty to end before our investment plans kick in, and that then slows down the whole economy's growth prospects.
A couple of years ago, you had underutilized capacities. Today, capacities are utilized. You have industries like steel, cement, paper, which are doing very well.
As a conglomerate, what would be your capacity utilization levels at this
It's now, I think, 100% across all our factories.
But some would then say that you've delayed investment already, that they should have started in the mid-70s, and by now you should be in a situation where you're waiting for new industry to come into life.
You know, it's always relative, but if one had to look at a very simple situation, in the last 10 years, our asset base has grown from 7,000 to 52,000 crores. And I'm not sure that's reflective of a slow investment.
This period has also seen the group move from being largely B2B to now being more and more on the B2C side. Can you talk us through some of the changes that were required internally in terms of employee attitudes, behavior, management thinking to be able to respond to this change?
Significant. And it's a very conscious move. We had decided a few years ago we will get away from government intervention intensive businesses. We will reduce our dependence on that. We will get into B2C. And you will see a much greater emphasis now on our new age businesses, FMCG, retail, sports, all of which are helping us connect with the consumer directly. And that will be the thrust, more and more thrust going forward. Of course, we are investing in our IT-enabled services business. We are investing in our chemicals business. We continue to invest in our power business. So we are investing across the board. But the emphasis will shift significantly towards these new age businesses.
As the crypto market continues to be on a steady decline, crypto trading and lending platform Vault has suspended withdrawals, trading and deposits on its platform. As per the company, the decision was taken due to financial challenges it was facing on account of volatile market conditions. My colleague Akanksha joining us for more on this. Akanksha, tell us how many investors use the platform, who are the other stakeholders in the exchange, and what does this mean for other exchanges in India?
That's right. We broke the news earlier today that Vault, a major crypto exchange in India with over 50,000 active investors, has suspended all deposits as well as withdrawals on its platform. Moreover, all trading on the exchange has also been halted. The exchange has come on record and said that they're seeking external help from financial as well as legal advisors so that they can come out of this financial drought. The exchange is backed by giants like Coinbase and Dalal Ventures, which is ace investor Peter Thiel's venture capital firm. It's worth noting that Vault had also laid off 30% of its employees last month because of the economic downturn. And this firing fever is not isolated. Several other crypto companies have also laid off a significant amount of their employees, blaming the general economic downturn. Talking about Indian crypto exchanges, they are witnessing a steep trading volume decline. And this is being blamed on the 1% TDS, which became applicable from last Friday, that is July 1st.
All right, Akanksha, thanks so much for that. Now, the newest entrant in the Indian airspace, Akasa Air, has unveiled its cruise uniform. The uniform focuses on aesthetics and comfort. Akasa's cabin crew will don the orange and black uniform, which is made using an eco-friendly fabric. Akasa Air is the first airline in the country to have introduced custom trousers, jackets and comfortable sneakers for its in-flight crew. The Rakesh Jhunjhunwala-backed airline is preparing to start operations towards the end of this month. That's where we leave it on the show tonight. Thanks for watching.